Out in Calgary, we have Ron. Hello.
I want to know your opinion of Suncor Energy, buy, sell, or hold.
Okay. So, Ron, this would be a third theme that we're invested in the energy space. Our long investments were energy infrastructure and the growth producers and the yield producers. This has been a more recent add to our portfolios. It's interesting, the heavy oil producers in Western Canada are starting to benefit from a couple of things. Canada produces about 4 million barrels a day. And by the end of this year, there'll be capacity for about 700,000 barrels a day to get to the Gulf by rail. So we're starting to see the discount of heavy oil versus light oil get squeezed out of the market to the benefit of the heavy oil producers. So with new pipeline capacity coming on and that ability to move it, it starts to become more attractive. Now, our big investment in this area is CNQ. We don't own Suncor, although it certainly is acting well. Technically, it's just broken out and probably has some legs to the rally as well. But I think that this is a great theme, and it's one that should continue to play out. The other thing is, of course, weak Canadian dollar is great for these folks because they win on the currency front as well.
David, we'll talk more about CNQ later on in the show. Back to pharmaceuticals. Dean's in Langley, BC. Hi, Dean.
Hi. I was quite lucky. I bought some Johnson & Johnson a few months ago, and I'm out of that now. But with the pullback with Bristol Myers, I wonder what Dave thinks about that. Thank you very much.
You know, Dean, a couple things. First of all, with pharmaceutical behaving as well as it is, hitting new relative strength highs versus the market, and with consumer staples doing as well as they're doing, you would think that Bristol Myers would be performing a little bit better. I'm wondering why you sold the J&J. I would continue to hold it. It's a holding of ours, and I would buy it here today. Frankly, though, if I had to make an investment in healthcare today, I think the obvious choice is in the biotech space, because there are some, fairly mature biotech companies today with multiple products and revenue lines that are trading virtually in line valuation-wise with pharmaceutical, but with growth rates twice as good. So we'll talk about, I think, one in our top picks today. But I think that Bristol Myers is underperforming the group in general. I would prefer to own a Merck or a J&J myself. Or I would look at one of these biotech names.
Yeah, or even a biotech ETF.
Or the biotech ETF, but we're going to talk about that a little bit today because there's some interesting stuff I think that we can consider about that.
Okay, you're talking about the IBB primarily?
IBB or FBT, yeah.
Okay, we'll talk about that later. Let's talk to Conti, who's in Dartmouth, Nova Scotia. Hello.
Thank you for taking my call, gentlemen.
You're welcome.
My question is about the three banks, Bank of Nova Scotia, Royal Bank, and TD. All of them touched the new high for the year, and they rose sharply, and then they came back tumbling down or even closed lower than what they closed at yesterday. Is there any particular reason about it, or are the big players manipulating their prices? And which one of these is the best bank, please?
Great. So, Conti, I would argue they're probably not, manipulating the price. Money flows to where it is treated the best. And the Canadian banks have been a great investment for a long period of time. We own both Royal and Scotia. We think they're great companies in the Canadian market. If you look at the leadership groups in the market, financials would be one, energy would be another. So thankfully, we got two groups that are big weightings in our index. Beyond that, technology, industrials, consumer, we have very little exposure in the Canadian market, so you got to go to the U.S. The one thing that I would say is within the financials group, I would choose asset managers and capital markets companies, more specifically M&A specialists before the big integrated banks. And if I was going to invest in the banks with new money, I'd continue to look at some of the big U.S. banks like a Wells Fargo, where you're likely to see accelerated dividend growth and accelerated earnings growth versus the Canadian banks that may just have somewhat more muted growth going forward. So I think Royal is a great company. It's got big capital markets exposure, so there's some risk to the near-term earnings because trading volumes are a little lower. Scotia has some risk with South America. I would prefer Bank of America or Wells Fargo, but you could buy either of these names. They just might relatively underperform versus the rest of the financials.
We're going to take a break, David, but you mentioned asset managers in Canada. Can you give us a name?
Yeah, so we used to run money for CI Financial, so we were never an investor. But this is an obvious play. They've had good returns in their funds. They've got good asset growth and a great dividend policy. It's a great way to be invested in a bull market.
Let's take another pause here, and we'll get back to your questions for David on North American large caps.